All right, Ashwani Bhatia joins us now. I'm Managing Director with State Bank of India to talk about budget, the implications of that, what it means for the banking sector, and how we can really be looking at a new cycle of revival for the infrastructure sector. Mr. Bhatia, good morning. Thank you for joining us. Get growth back. I can say it 3 times, and that really is the whole punchline of the union budget. Now, on paper, we can say growth will come back because of government spending. But for growth to come back, a whole other factors have to come together. Interest rates, banks' willingness to lend, corporates' willingness to take risk. Do you think all the pieces of the jigsaw puzzle could fall in place?
Thanks, Nikunj. Certainly. So how do I see it? Let me, tell you, if RBI did the heavy lifting in the first, throughout this year, I think now it is the turn of the budget. And it's a rare combination where, the RBI and the government have complemented and supplemented each other, to tell you very frankly. And this budget has surprised on the positive side. And that was reflected in the markets yesterday, and it's reflected in the markets this morning also. So it's nice to see the markets back to 50,000. The Nifty also is very close to its previous peaks. But certainly, the actions that they've taken, for a change, they have not tinkered with income tax, corporate tax. Very clearly, this budget was forward-looking. And they acted and attacked where, where they could have got the maximum buck, pound, or whatever you may, word that you may possibly use. So they have got the bang for the buck. And very clear, they've been very good as far as, transparency on the numbers, on the deficit numbers. Although 9.5 or 9.6 for the current year looks very high, but they are factoring in things like the food subsidy, same for the next year, where it is projected to be about 6.5. You talked about interest rates. They have moved up a little, but I'm sure in the coming days, when you read the fine print, interest rates, I guess, would also stabilize to near the current levels or perhaps around 6 or below.
Okay. Let's understand the whole idea of bad bank. The idea of bad bank here is that the NPAs on the balance sheets of bank, they can be cleaned in a methodology which will not hurt them, and banks will get some cash back because of write-backs. Now, government has tried to implement a bad bank idea from last 8-9 years. How do you think this time it will be implemented?
So very positive. So they are not just talking about a bad bank, but they're also talking about number one, a ARC, and also a AMC. So as I see it, of course, we haven't seen the fine print yet. We haven't seen the process in which it's all going to happen. But I would presume that whatever bad assets banking system has, they first move to a ARC, subsequently to make them above suboptimal, they would move to a AMC, and then of course private equity, AIF, or willing buyers can come in and purchase the asset. The good part here is that the asset per se, because most of the bad loans are in a consortium. So if they get consolidated at one place, there is much better price discovery. Of course, there has to be more discussion on the price at which the asset is finally transferred from the banks to the ARC. So whether it's going to be a distress value, whether it's going to be a fair value, or it's going to be 1 rupee above the distress value, all those loose ends have to be tied. But it gives us a lot of hope. There is a lot of NPA currently in the system. A large part of it is written off. I mean, in our case, almost our entire stress book is provided for. So anything that comes in will be welcome as far as our bank is concerned.
Sure. Mr. Bhatia, I mean, not for SBI, but for the entire banking industry. The Finance Minister announced the disinvestment of 2 PSU banks. A, do you think it's going to be an easy task? What would it really entail? Would legislation would it have to be amended? And will people buy into these banks, more importantly, until NPAs are cleaned up? It's a bit of a chicken and egg situation, I know, but what's your take on the same?
So the banks were nationalized in 1969 and some were nationalized in 1980. We have been talking about this for some time now. But I think if the government decides, and I think they're taking a very calibrated and very well orchestrated way of doing this whole thing. So first, they consolidated the banks, and there are a few now, the smaller ones. There could be one or two that are mid-sized that can be, offered to private sector or to investors. There will be an appetite for the simple reason that you are getting employees, you are getting a good distribution, and it's in a way, if you ask me, it's a landmark article that has been put into the finance bill. Good thing also is the fact that all of them are listed. So once the process starts, it's just the sale of the government's share to a new owner, and it can happen seamlessly. We have recently seen in the case of Lakshmi Vilas Bank where, of course, that bank was under significant stress. And if the desire is there, it can happen overnight also. The changes on the legislation will be brought in, I'm sure, within the next few months. And I am quite confident that before March of next year, this sale is eminently possible.
Thank you so much for being candid. Tell me, what about the PSU recapitalization? You think it's sufficient? 4 PSU banks, as I understand, have capital adequacy of less than 13%. They're going to need infusion fairly soon. You think it's going to be difficult for PSU banks to raise equity capital purely because of the valuations that they're quoting at? How is it that they will manage growth and stress with no capital?
So some of the public sector banks have raised capital in the past two or 3 months. Our bank alone has been able to raise about 27,000 crores, including some in the 81 bonds. Other banks, including Canara, PNB, IDBI, they have also been able to raise capital. So going forward, once most of these banks are now outside the PCA. If that happens, growth comes back, and there is 20,000 crores for recapitalization. I have no doubt in my mind that things will be much better going forward. There is going to be price discovery, when these two are sold. The third, of course, is IDBI. It comes under a different act because it's owned by LIC and it's ruled not by the Nationalization Act, but by the Companies Act. So if that is the first to go, there will be some benchmark around the pricing. And again, there are people who are willing to come to India. The opportunity is here, the growth is here. And I don't think NPA will be a very big issue for the new promoters who come in.
Okay, what about pro forma NPA recognition? Do you see that ultimately being a reality, and is that a cause for concern?
I can't talk about my bank because we are currently in the silent period. We declare our results day after tomorrow. But from whatever we have seen from the other banks so far, that has not been a worry. And the numbers that came out in the financial stability report do appear, and I hope I'm right on that, and I hope the financial stability report is incorrect, they do appear to be way too pessimistic.
Okay, fair enough. And, as you said, you're in silent period, but if you can shed some light on the credit growth and the kind of outlook, that currently you're looking at?
So it's going to be in line with what we had told our analysts and the press at the end of the second quarter. So won't be much change from there.
Right. Right. Also wanted to understand if you could tell us about the update on subsidiaries within SBI as well, and whether or not there is going to be more value unlocking soon or not. I'm not quite sure if you can answer this at this juncture or not.
Yeah, so again, the guidance would remain the same. Possibly in FY 21-22, there could be one subsidiary that could go in for listing.
Okay, Mr. Bhatia, great to have you on the show. Thank you so much for joining in with your take on the budget and, more importantly, what it means for the entire banking industry. Great speaking with you today.
Thank you very much.